Hey everybody, what's going on? It is James here, and in this video, I want to teach you how to properly read an equities chart on TradingView. It seems like a lot of people are confused about this, and I understand why, because when I first started out, I didn't understand this either. So I was on Twitter, and this guy Vince, who seems like a very nice guy, although I think he's a little bit delusional on Bitcoin, he has a lot of followers. He's got around 6,000 followers, and he's just a really big Bitcoin believer. And so when he looks at the market, a lot of what he's doing is he's comparing things to Bitcoin, right? He's like, oh, SPY is not as good as Bitcoin. QQQ is not as good as Bitcoin. He said it's only up 442% since 2000. Basically, he's calling from the top. I don't think that's even kept up with inflation, laugh out loud. But just like I told him on Twitter, it stopped inflation. He didn't include dividends. You can't look at a chart on TradingView of a dividend paying stock or equity and do this. Oh, it's up 373%. That's not as good as Bitcoin. Because unlike Bitcoin, some equities pay dividends. So if you go into the lower right-hand corner of a TradingView chart and you click this ADJ, that stands for Adjust Data for Dividends, watch what happens. The chart suddenly changes. And the real return of the SPY, including dividends, was nearly 700%. Now there's a massive difference in 4x and almost 7x. This is a more than 50% larger return than what he's claiming on X. And I don't think he's being dishonest. I just don't think he understands that the chart doesn't include dividends. Part of the reason I think that is because this looks like a Robinhood chart. And Robinhood is not a platform for professional traders. Robinhood is a platform that caters to retail traders. For example, Robinhood pushes the idea of no commissions. But if you actually look at a Robinhood order on like Bitcoin, for example, a lot of times what you'll find is there's a baked in spread that's as large, or in some cases even larger, than a fee that you would pay on a cryptocurrency exchange. It is absolutely critical that when you're comparing assets, and if you're going to compare crypto to a stock, that you use a price adjusted chart, because this is giving you the real story, whereas this is not giving you the real story. Non-adjusted charts work great for doing things like technical analysis, looking for edges in the market. But if you're just looking at total returns, you've got to include the dividends. And that brings me to my second point of this video is, a lot of times I'm doing comparisons of Bitcoin versus other assets. So you'll see me do something like this, Bitcoin divided by SPY. And when we look at this chart, it's like, wow, look how much it's outperformed the SPY over the long term. Yes, it's down over 50% right now, but over the long term, it's not a fair comparison. And I've realized lately, being on Twitter again, that most people do not understand market cycles or market fundamentals or how markets work. And they're trying to extrapolate these early returns of Bitcoin, the 100Xs and the 10,000Xs from a few cents to $100,000. And they're like, this is going to the moon, all this kind of stuff. And I've talked about in previous videos, diminishing returns. So let me kind of explain something to you guys so that you understand this. It's not bullish or bearish. It's just, you need to understand this. The SPY has around $750 to $800 billion asset under management. Right now, Bitcoin has around $1.1 trillion actually invested. Now, some people are going to call me out and say, no, market cap's 1.6. Market cap is not the same as money invested. Market cap is an inflated number based on the current price of Bitcoin. But that price is based off of the order book. And that order book, once liquidity dries up, either way, right, up or down, if liquidity dries up, price can move up much, much further than actual investments flows, right? And it can also move down much further. Do you actually think when COVID hit and Bitcoin fell from 8,000 or 9,000 to under 4,000 that half the people that own Bitcoin sold? That's not what happened. What happened was people were being forced to cover longs, and they're getting liquidated. And so the order book dried up, liquidity dried up, and the price dropped. And that's a whole long discussion. I've written about it on my blog before about, the market cap illusion. But the actual assets under management, if we call it that for Bitcoin, it's not exactly what it is. It's about 1.1 trillion. So Bitcoin actually hit $750 billion. I just looked it up around December of 2024. So if we really wanted to be apples to apples on these assets, we would compare them when they're the same size, because that's when we know, hey, it takes roughly an equal amount of money to move the needle. So if we start in December of 2024, that's right there. So since being roughly equal size for the SPY, what has Bitcoin done? And the answer is really nothing. This is what you have to understand about all assets, not just Bitcoin. When an asset first begins, when it's small, right? Tiny size, big excitement. Because the float is so small, right? The amount of money involved in it, you can see those 10x's and 100x's or more, like Bitcoin going from a few cents to $100,000. Really, though, not even 100,000. Like from a few cents to 20,000, market cap is still pretty small. So returns are enormous because the base is so small. This could be the next big thing. Then you enter a price discovery phase, right? This is probably more like 2017 is when this started. So no one really knows the value. Price rockets, buyers pile in. Peak mania on Bitcoin was actually 2017. If you look at Google Trends, it peaked in 2017. It's never come close since. So there's still massive percentage gains possible, that the risk is rising. This is where hype peaks. Again, you can look at Google Trends. This is where hype peaked at. We then enter a contraction phase, the big shakeout phase, right? And we've seen this in cryptocurrency. After the 2017 top, it fell, 83%. Weak projects die. This is really where we're at now. If you think about it, like everybody's waiting for altcoin season, and it's like, where's alt season? Where's alt season? Most altcoins have completely died. Altcoins that used to be praised, going to the moon, $5, $10, $15 Verge. Now Verge is less than a penny. OMG at $750. Yeah, OMG topped at 28. Now it's like 30 cents. The list of coins is endless that's happened with. And so really, we're just left with a handful of winners. Contraction, that's what happens after contraction. And now we finally enter into phase 4, where the asset survives. So Bitcoin has obviously survived. It's bigger, it's more established. We see institutional flows in it. We even see some government flows into it. Real users, revenue, or adoption. So there's no revenue with Bitcoin, obviously, but there are real users, and there's obviously adoption, right? Some governments have actually bought Bitcoin. And of course, we see a lot of big institutions buying Bitcoin. It's no longer tiny. It has real size, billions or trillions. Of course, in Bitcoin's case, it's actually a little over $1 trillion right now, about $1.1 trillion invested in Bitcoin. Again, not to be confused with market cap. Returns shrink. So the same amount of new money now moves price much less. So where early you might see 500 or 2,000% moves, later it was 50 or 100%, even later 20 to 30% feels like a really solid. And I think this is where we're at with Bitcoin, right? I think even 20 to 30% is probably far-fetched at this point, long term, right? Now, I'm not saying it can't go 20 or 30% period. I'm saying like long term, to average that every year is going to be pretty far-fetched. I did another video showing the math behind it. So volatility starts to calm down, and it acts more like a mature stock or an asset class. Bottoms of each cycle are higher than before if it succeeds. It's not a guarantee, but that's likely where Bitcoin is at. Again, we can see this if we look at the math behind it. In the first cycle, there was a 318,000% gain. The next cycle returned roughly 20% less at 62,000%. The next cycle returned roughly 20% less at 12,000%. The next cycle returned 17% less at 2,100%. And then this last cycle topped at just over 700% from its low, which was roughly 33% of the previous. So for those of you that have followed me for a long time, you'll remember me using this math. This is how in 2019, this is why I said, hey, Bitcoin's going to go down to 4K, right? Which it did. I was using that because I thought it would retest the base. And then I thought it would go up to 52 to 75,000 by 2022. Well, the 2022 was easy because I was looking at 4-year cycles, and the top was using a roughly 20% of the previous return. That's where I got that range from. There's a little bit more involved, but that was the baseline that I worked off of, was that it would return roughly 20% of its previous cycle. It ended up returning 17%. So if we continue this path, let's just say the next cycle, if you're bullish, let's hypothetically say that Bitcoin bottoms at around let's say 40,000, which I don't think it will, but let's just use that number. If the next return is 33% of the previous return, that means the next return is going to be around 200 to 300% off of the below. So if it falls to 40,000, that means it's probably going to go to like, maybe like 120 to 160 next time. If 60,000 was a low, the next time it's unlikely to go more than say like 240,000. And it's not that that's a terrible return, but it's just, you can get those returns in the stock market. And then the last thing I'm going to wrap up with is this post I made on Twitter, which is, a lot of people, a lot of the Bitcoin maxis, they really push this idea that if you're not a Bitcoin maxi, you're a fiat maxi. And it's really the dumbest, like low IQ take that I think I've ever seen. No one who's serious about investing actually chooses between Bitcoin and cash. Somebody like me who's a Bitcoin skeptical doesn't say, well, gee, I'm not going to own Bitcoin. I'm going to put my money in US dollar and put it in my savings account. That's not what I do. It's not what anybody with any ounce of investing knowledge does. You put your money in other investments. You're saying, I don't think Bitcoin will outperform SPY, for example, long term, or QQQ long term, or, some individual stock that you're big on. Or in my case, I don't think Bitcoin will outperform bonds long term. Bonds historically have returned between 7 and 8% annual returns over the last like 50 or so years. So it's not that I take my money and I go set it in US dollars and then a savings account. That would be absolutely idiotic. Even when people are like, oh, keep an emergency fund at 3 to 6 months. No. I did that for years. And then before I realized how much I was costing myself. I keep my emergency fund in SGOV, SGOV. It's basically an ETF or short-term treasuries. It's very liquid. If I need cash out of it, I can sell it and the cash settles in my account within 2 business days. So I don't know what kind of emergency I would have where I would need cash within 2 days. I mean, I've got a few $1,000s in my bank account. Usually keep about $5,000 in there. But if I need more than $5,000, I seriously doubt I'm going to need it that same day. And so I keep my emergency fund, if you will, in SGOV. Even my emergency fund is earning about 3.5% a year. So you have to get it out of your head if you're one of these people that thinks this way. Oh, Bitcoin's better than cash. I'm afraid my cash is going to get inflated away. Your cash will get inflated away. That's not an if, that's a guarantee. Your cash will be inflated away if you're actually sitting in cash. You should have your money invested. It just doesn't need to be invested in Bitcoin. It can be if that's what you want to do. I'm not telling you what to invest in. I'm just saying this is how markets work. People invest the money in something else. And the reason that Bitcoin struggled so much and the reason that Bitcoin had a smaller cycle this time and the reason Bitcoin couldn't punch higher than it did is because the money, the capital, rotated out of crypto and it rotated into AI stocks. I had done an entire post about this in my blog back in August. This date is wrong. I made a post on social media at the same time in August of 2025. And essentially what I was saying is that the money was rotating out of Bitcoin and into AI. And I used the chart of the Mag 7, Bitcoin versus the Mag 7, to illustrate that it looked like it was in distribution. And if we go look at this chart right now, here's August right here, this first red candle, and it rolled over. Because what actually happened was capital realized that they had a better chance of getting a bigger return chasing the AI stocks than they did cryptocurrency. And that's what happens. They didn't say, oh, I don't want to be in Bitcoin, so I'm going to go put my money in US dollars. They said, I'd rather be in AI. It's not even that they disliked Bitcoin. It's just that they thought there were bigger returns elsewhere. The market runs on fear and greed wants the biggest return possible. And in hedge fund cases, they want the biggest return possible while also taking on the least amount of risk. So they balance those two. Where's the biggest risk adjusted return? So when you're comparing Bitcoin versus other assets, first of all, make sure that you are taking into account dividends. And second of all, make sure that you realize that it's not a game or a battle between Bitcoin and cash. It's a battle between Bitcoin and every other investable asset on earth. If you enjoyed this video, make sure you give it a thumbs up, subscribe to the channel for more data-driven content. And as always, please remember that I am some guy sitting in a spare bedroom. Nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. Thanks for watching, and remember to trade safe.